with the signals that we are seeing around the desire for acquisition of capabilities and the new warfighter initiatives that are coming out of the Pentagon for how we are going to fund things. Because remember, these companies all make their money off of government contracts, 60, 75, 80% in some cases. And so if they're not effectively doing that, they have to reshape themselves to be effective, whether that means getting smaller, going public, or something else.
From the Defense and Aerospace Report, this is the DownLink, a podcast about the intersection of space, the space business, and defense. Not just what's over the horizon, but what's happening above it. I'm your host, Laura Winter. Whipsawed. That's how many stock investors and traders are describing this week. The churn is from the steady diet of headlines and questions coming out of Washington. Will the Justice Department continue its criminal investigation into the Fed chairman, Jerome Powell? Will the Fed remain independent? Who will lead the Fed once Powell's term is up in May? On Friday, President Donald Trump said he wanted to keep Kevin Hassett in his current job as the National Economic Council director. And then there's the president's saber rattling over Iran's treatment of protesters. And on Friday, Trump floated the idea of imposing tariffs on nations that don't support his push to take over Greenland. After the week's ups and downs, all the major U.S. indices have either lost or gained just a wee bit. The NASDAQ, which is where most space companies are listed, seemed on track to end the week down by 0.5 percentage point. But those space companies, they seem to be offering something different: steady and substantial gains. The Pure Space Exchange Traded Fund, or ETF, is up almost 110% for the year and gained almost 4% today. Another ETF, ARC Space and Defense Innovation, over the past 12 months, it's gained almost 78% and is up today more than 2.5%. In the same 12-month period, SES, the storage satellite communications company, climbed just above 126%. And Rocket Lab, by comparison, its stock price has soared by almost 302% and is trading up today by roughly 9%. So what's driving this enthusiasm? Is it Elon Musk confirming reports that SpaceX plans to go public this year, or is space simply hot right now? To separate fact from fiction and tell us what to expect in 2026, I've got Chris Quilty and George Pullen. Here's our conversation. Hey, Chris, George, it's great to have you back on the podcast.
Thanks, Laura.
I'm excited to be back. Thanks.
It's great to be back with you and George.
You sound so convinced. Right, we should take a quick moment and have you guys introduce yourselves. So, Chris, why don't you start that off?
Thanks, Laura. Chris Quilty. I'm the founder and CEO of Quilty Space. We are a consultancy, strategy firm, and investment banking work, all focused on the satellite and space industry.
And George?
Thank you. George Pullen, Chief Economist, MilkyWayEconomy. We are a fifth Industrial Revolution think tank and consultancy. The fifth Industrial Revolution is, of course, the coming space economy. We have operations in DC, Texas, and Florida, and we enjoy also investing alongside of the companies that we believe in.
Thank you both so much for being here on the podcast today, especially at the top of 2026 in the first quarter. Now, we have had a number of announcements from some governments of huge increases in spending on space systems, particularly defensive space systems. We've got the Trump administration's Golden Dome, Germany's announcement that it will spend $41 billion on space systems between now and the end of 2030. ESA is getting the largest budget ever, and there are others, such as South Korea. And they're all pushing ahead with developing sovereign space capabilities like launch. And all of that activity takes capital, which is why I have you guys on. So I'm wondering, what would be your headline for 2026? What's the strategic through line or theme coming out of 2025 that is coming into this year? Chris, why don't you start that one off?
Yeah. So maybe just to start on the financial side, I mean, we had IPOs come back. I mean, these are regular way IPOs, not SPACs, for the first time in years in 2025. And obviously, we got the announcement of a SpaceX IPO here in 26 expected, and I think that's going to pull along. I mean, we've had years and years of increasing investment in startup companies. We've got investors and funds that need exits, certainly on the venture side, but also private equity. And so I think 2026 is going to be a year of deal activity on the financial side. For events, I think always we're waiting for Starship and hoping to see that get operational. But I think the other interesting trend I expect to see happen is a bit of a reversal, right? When we talk about M&A, we've been seeing consolidation for years, and what we're seeing coming out of the Defense Department is a push for smaller, more agile companies. We may actually see a trend reversing. And then, of course, the other big thing we're waiting for is a Golden Dome announcement, which has been pending, both because of the size and the nature of what they're going to be looking for is going to drive a ton of defense spending and activities in the industry for the next couple of years.
Chris, I just need to hand you my microphone because you're just basically explaining what this podcast is about today. So, but if you could actually put that into a headline, like a line doesn't even have to be a full sentence, what would it be?
26 is going to rock again.
Thank you. George, what about you? Do you have a sentence as opposed to, giving us a... All right, what is it?
I can think of one, right? So I think leaving 2025, we had the dual speed economy and the great decoupling. And I think as we head into 2026, we're going to see a reallocation from SaaS to steel.
Ooh, that's a good one. I like that, George.
Yeah, I thought about that. I thought about that on the plane ride yesterday.
He does think from time to time. It's an awesome thing. All right. Well, with that then out of the way, let's get an understanding of the state of the U.S. economy and the space economy. And that means you, George. So what's going on? Productivity is up, but food and housing costs are rising without a similar rise in household incomes. It kind of feels like everyone's working a little bit harder for less, right? And how does that affect the space economy, or even does it?
So, yeah, this is a good question. And this is something that, comes up quite a bit when I talk to folks out there in the real economy, outside of, space and defense and tech. What I will say is that we've really seen a bifurcation where the companies and the workers that have done the best over this last year of 2025, those were those that were positioned in fast-growing software and, quite frankly, let's just use the buzzword, AI companies. You see companies that have leaned in do quite well. Some of the historic FANGs have not, but you see companies that have leaned in do quite well.
You want to explain FANG real quick?
Sure. So FANG, Mag 7, take your, financial media buzzwords. It's just a variety of acronyms to explain a portfolio of companies. So if you're thinking about, high-tech companies, you're thinking about things like Amazon, Netflix, Google, Microsoft, and the like, right? So
and
those
the
types
F is for Facebook. Just
right.
to keep you straight there.
and those types of companies have been historically members of the tech sector. They have been outperforming the S&P by and large for several years now, just quite outstanding returns. Can't talk about the overall market without talking about NVIDIA, obviously, skyrocketing, obviously, with their ability to supply the bits and pieces necessary to make AI happen. But what that has done to the overall economy is you have another whole segment that has not seen those same types of returns. Because remember, we talk about headline numbers and we talk about, what did the S&P do or what did the markets do generally? Well, that's an aggregate, right? There's all the stocks in there. So it's not just these high flying companies in there. It's also, companies that have been around for hundreds of years that make products that you can touch, right? Things like, John Deere and Dow Chemical and other companies that employ thousands, tens of thousands of workers, and they haven't seen the same uptick in price and activity. And I'd also say that in terms of the overall economy, although quarter over quarter inflation has tampered quite a bit, the inflation that got injected in following COVID and COVID relief is still very much being processed through the system. And depending on the sector, especially sectors outside of space, defense, and tech, they're still very much grappling with that. So you see a real bifurcation, and that bifurcation adds fragility.
And we have tariffs too. I mean, that's still being sorted out.
We do. I think that has more of an effect on volatility than it does long-term prices, but I digress there. I have different feelings about tariffs.
Okay. Well, let's also take a look at the news. Would the removal of the Fed chair have an impact on the space economy? And maybe not, right? I mean, would it impact publicly traded space companies? And because, the Fed does set borrowing rates, one would assume that would also affect private equity investments and check writing into the, private space economy, if I could call it that. That's probably a bad way of calling it, but that's where I'm going to stop.
Sure. So something that we've talked about before over coffee is, of course, that interest rates have a direct impact on investor activity. And just to really break that down, when the Fed sets rates, those rates eventually translate into the rates that you or I could get at a bank or a money market or a CD, or that another type of investor could get in a low risk, let's say, marketable CD or bond fund, right? And so that federal funds rate then impacts the rates that people can get for assets that are very low risk, right? And so if they're able to get a high rate of interest because interest rates are high, then what is their incentive to take risks? What is their incentive to invest in space and deep technologies and things that are, a little bit riskier? The fact is it just goes down. Right.
So what would if the Fed chair were to be removed because there's this investigation and there has been talk that it would negatively affect interest rates, as in raise them, even if the rate was dictated by the administration. Nevertheless, because it would mean, I guess, and please correct me if I'm wrong, that things were a bit more risky.
So remember, the Fed sets rates. Banks then respond to the rates that are set and then offer their products based off of those, right? So what we would see is a potential trickle down where the Fed sets rates. Let's pretend rates were to go down, then there would be more of a movement into assets that are riskier so that people could try to collect some premium and try to collect some returns that they wouldn't in an unrisky asset. But if the opposite was to happen with rates, then you would also see the opposite where less money flows into riskier investments.
So, George, you're not answering my question.
Well, I think if you look at the most recent surveys, we've gone from an environment where Bloomberg has said we're going to have 3 cuts in 2026, and that was as recently as 2 months ago, to now most of the consensus opinion is that we're going to have no rate cuts in 2026. But I do not see anything on my Magic 8 Ball that says we're going to see rates increasing this year.
Yeah. So Jerome Powell's removal, no effect.
No effect. Not for the space economy.
There you go. Thank you. So another angle on borrowing is the fact that debt financing is usually a cornerstone of mergers and acquisitions. And just in the last few months, right up to this week, in fact, there's been quite a number of huge announcements in M&A. So, Chris, what's the state of M&A? Seems like a lot of big deals are being made. Is 2026 really the year for M&A in the space sector? And you said up top that maybe it's not.
Well, I think it depends on what type of M&A you're talking about. There are the private equity roll-up type transactions, which, have created companies like Carmen, which recently went public successfully, and others. I think we're going to see less of that. I think a bigger part of the M&A are going to be exit transactions for companies in the private equity and venture space that have been sitting on their holdings for long beyond their traditional holding periods. With each of these types of funds, it's typically a 10-year duration. I'm in some funds that are of that duration. Haven't seen a lot of cash come out of them. So for a lot of reasons, 2026, as I said at the opening, I think is going to be a pretty banner year. I said the same thing at the start of 25. If I go back and roll the tape there, the dynamics are different this year than they were last year. I think at the time we did this a year ago, Golden Dome hadn't happened. These huge sovereign deals coming from Japan and Germany, and Planet just picked up a deal with Sweden, yesterday or a couple of days ago. That dynamic of defense spending is going to be a large driver, and the capital markets, right? I think the economists I'm hearing now are looking for prints of like 5 or 6% GDP growth. That's probably the reason we don't get a rate cut. I don't know how you can cut rates when the print numbers are that big. You could argue about this, the strength of where the GDP is coming from, and we still do need lower rates for the housing market, et cetera, et cetera. But there's a lot of things teeing up that say next year is going to be a pretty strong year. Now, specific to M&A, I mentioned before, I think probably the best, unless you want to go through all the recent things coming out of the Pentagon of their strategies. I guess it was about a year ago, Palantir, the CTO or CSO, published his 18 thesis on their website, basically saying that the roll-up of the defense industry into 5 prime contractors in the 1990s after the end of the Cold War was a mistake, and that you have to remove the concentration of these large prime contractors. And it is interesting, right? If you look at a company like L3 Harris, which, for decades now, has been rolling up, trying to get larger, trying to get into that, top 5 prime contractor. Chris Quilty, who was an L3 guy, right? He's a roll-up guy. Well, what have they done, since Trump came into office? They're selling off assets and they're spinning, the businesses separately. And I think that's the trend. When you look at the large prime contractors, I would suspect a lot of them to look at what's the verbiage coming out of the Pentagon. And, a company like an L3 Harris, that's a, pretty quick operator, and look at that trend and say, hey, that's probably where we need to go too.
Quick question though, Chris, what benefit is it to L3 Harris to spin off? What does it do for them to do that? Because these assets that they are selling off or reaching really interesting deals, like the one with A&E Partners, right? That's kind of a 60-40 deal where L3 Harris continues to own Aerojet Rocketdyne systems of some kind that are supposed to be just for civil and commercial uses. What does that do, though, for L3 Harris? Why is it smart for them to do that?
Yeah, well, remember, who is L3 Harris? It's shareholders. That's the top question, is by spinning off these businesses into separate entities, do we create more value? And I think, yeah, they just created immediate value. So that's what it does. Now, you could say, okay, of the remaining companies, and geez, I used to cover Harris back 25 years ago when they had the damn copier business, they had a semiconductor business, they had a machine tool, telecom tools business. All that stuff got spun off. They got into healthcare, that got spun off. This is a natural part of it. And I think, the other rationale is that when you look at the direction that the Pentagon is moving in its contracting, it's just a smart move, saying that, if the Pentagon's going to favor companies that can move fast and be agile, it is, almost impossible to compete on that basis when you're part of a massive conglomerate that is highly structured and hierarchical.
Interesting. And space companies that are publicly traded, many of the big names are doing well, right? In terms of perceived value. Chris, what is the state of the publicly traded companies, and who are the biggest market winners and who are the losers coming out of 2025 and going into 2026? I mean,
Yeah.
it seemed like mostly winners, but I mean, were they all winners? Maybe they were.
Well, it was a holy crap year. I mean, the markets were up, like 16% or so. Our core group of space companies, kind of break them up into core and then our frontier group. Core was up 107%, and the lagging frontier stocks were only up 47%.
Oh, gee, only 47%. Oh my.
Yeah.
Yeah.
I mean, if you break it down into sectors, which we like to do, if you look at the hardware-centric companies, what do you think was the key trend amongst 3 of the top 5 winners of people that are building, rockets or ground equipment or satellites?
Infrastructure.
The answer is they were European. So the Euro stocks killed it last year. AAC, Clyde, GomSpace, Avio, right? They just cut a big deal with Raytheon to build solid rocket motors in the U.S. They were up 200%. The other 2 in that group were Kratos and Rocket Lab, which were both up around 150, 200%. The losers in that category were some of the frontier companies like iSpace and Redwire and Virgin Galactic that were down 30 to 40%. The SATCOM sector was actually the best performing sector in the space industry, and for an odd reason, because again, 3 of the top 6 performers were old school geo satellite operators. Viasat was the big winner, up 300%. In Japan, JSAT up 120%. Even SES doubled. Part of that were rebounds, right? Viasat had the surprise sale of their Legato spectrum, which brought in some cash, and they're not going bankrupt with a big short covering. The kind of organic winner there again was AST, up 250%. The Earth observation sector, Planet was the big winner, up there about 390%. But you had, with these sovereign deals happening, companies in Japan and South Korea. In Japan, Synspective on the SAR and IQPS, up 150% and 50%. SatTrack Initiative in South Korea up 75%.
So it sounds like a lot of these public companies are basically being powered by locks, right? I mean, this is supercharged increases in value. I mean, you're talking in hundreds of percent. So then I've got to ask, right? Word on the street for the past few weeks, and you mentioned it up top, has been that SpaceX will go public. You obviously think it will happen, but there is a rumor that it may not happen in the way that many thought it would, because MSN reported on Monday that Musk may seek a reverse merger with Tesla. So, first of all, what would the SpaceX IPO mean for the space ecosystem? And George, I do expect your participation here. And would it make any difference if it was a reverse merger? Maybe you should answer that first. I don't know.
Yeah, I would less prefer a reverse merger. I mean, I think it would be much easier for investors to value SpaceX as an independent company with visibility on the numbers, better visibility than we would get in a big merged entity. All that said, regardless of the mechanism, the fact that SpaceX is going public, or if they do go public next year, is a huge win for the space industry. Even if SpaceX is a mortal enemy to a lot of the companies in the industry, this is clearly a rising tide lifts all boats sort of scenario. And again, one of the reasons why I expect we're going to see a huge wave of IPO activity. I wouldn't be surprised, with a half dozen to a dozen companies coming public. Now, if it is folded into a Tesla or some other holding company organization, won't quite have the same punch as a standalone company. But either way, it's clearly one of the core drivers for the sector performance, I believe, in 26.
I think something to add here is, as we're talking about these companies' behaviors, like we have to remember the transition period, right? So when they kind of go from the private world, where I'm spending most of my time, to the public world, where Chris is, obviously an expert, we have companies last year in 2025 that, made that transition, right? We had Firefly have their IPO. We had Voyager with their IPO. We had several others. We also had York do their S1 filing. So presumably, we'll see that as well. So there's quite a bit of movement. And to Chris's point, we should expect even more of that as we head into 2026, where people who were private are going to be coming public. And I think the same reason we're seeing that is the same reason we saw L3 Harris make this move that we were just talking about, right? So, L3 Harris, they're a, almost $60 billion company. They get 75% plus of their revenue from Uncle Sam government contracts. And so it is their job to effectively navigate warfighter acquisition. And if they believe they can effectively navigate warfighter acquisition better by being breaking into smaller groups, right? So a movement from the mega mergers of the 90s and early 2000s into maybe smaller spin-offs that can be more agile, right? Think of the agility of a Palantir or an Anduril and the success they have had recently in winning contracts. Those companies are smaller, more nimble, and they're able to do this. And so when you see a large company enter public markets, they go through this transition period where they get bigger and bigger. They, consolidate their rivals. They grab up, other companies as they can. But then they reach a certain point where they're not actually able to execute on their mission for their shareholders. And when that happens, that's when they look at these tactics, right? That's when they spin things off. They sell units and the like. So I think just to put a different spin on Chris's point, this same transition from private to public that we saw a little bit in 25, and this transition that we're already seeing from mega to small in 26 with some of these L3 Harris spinoffs, we should expect to see more of this. And this all has to do with the signals that we are seeing around the desire for acquisition of capabilities and the new warfighter initiatives that are coming out of the Pentagon for how we are going to fund things. Because remember, these companies all make their money off of government contracts, 60, 75, 80% in some cases. And so if they're not effectively doing that, they have to reshape themselves to be effective, whether that means getting smaller, going public, or something else.
But would a SpaceX IPO also affect private equity and privately held companies? And there's a lot going on in the private equity world, generally speaking. And I do mean generally, not just space, but because, their checks are more frequent and the dollar amounts, the value of these checks are also rising. And it's not inflationary. They're getting big.
So I think what we would see is the secondary and tertiary effects of a SpaceX IPO are probably the most interesting ones to really think through, right? So we're going to see a piling on where other space companies, which might have been targeting their IPO for a little bit later, will want to grab this moment and also be part of it, right? Some people might, miss out financially on a SpaceX IPO, and so they want to participate in a different space company's IPO. That is a phenomenon we have seen in other industries where an industry leader has a public day in the sun, and then other companies also, maybe not in the first position, but in very much complementary secondary positions, have their IPO. That is a phenomenon that we've seen, and we should expect to see with a SpaceX IPO. Even with the rumor of a SpaceX IPO, we should expect to see more space IPO filings and more defense tech filings. I think the tertiary impacts are also very interesting to think about, the third order impacts, which is that when you have an IPO, what happens?
That's an exit.
That's an exit. People now have liquidity. People who have been in a company that has been private for a long time don't have the same liquidity mechanisms that people who are in a public company have. Now, granted, if you want to get into SpaceX secondaries, that's an active market. Those are always happening, right? So this is not, one for one the scenario here. But the fact of the matter is, when you have an IPO, that is a liquidity event. And that liquidity, going back to the limited partners, the LPs, the people who actually have the money behind the funds that are investing in companies that are private, now that they have that cash back in their pocket, they're not just going to sit on it. They're going to redeploy, right? And so when they redeploy, if they've come off a recent win in space and defense, then I feel pretty assured that they will be putting some of those returns, maybe more than before, back into a space and defense play.
And I just want to help out the audience here just a little bit. According to PitchBook, and these numbers are general, not just the space economy, but the full year PE deal value was 1.2 trillion, the second highest total on record after 2021. And mega-sized deals were many. There were 150 transactions exceeding $1 billion. So the checks are getting big. Nevertheless, on the flip side, what I found really interesting out of PitchBook was that they report that there is $1.1 trillion in dry powder. So is that $1 trillion going to be deployed this year? And then I'd imagine dry powder would increase, because if there are these exits through IPOs, that amount of capital of dry powder would grow, would it not?
Well, yes and no, because to the degree that there are successful exits, cash goes back to the LPs. If you're an LP that's had your cash tied up for 8 years, you may or may not want to reinvest in new funds.
May want to go buy a yacht.
Yeah, but those funds they flow back into the market, right? In one mechanism or another, either as you mentioned, consumer purchases or business investments, and it's always great to have liquidity. But I think the dry powder here is likely to grow, right? To the degree that there are exits and excess cash comes back to becomes available for investment.
All right, so we're running out of time now, but I'd love to get your takes on the big stuff. What's coming? What's helping? What's holding the space sector back? And it's prediction time. It's your favorite part of our show here. So, George, why don't you go first and give Chris a little more thinking time?
Sure. So I think what we're going to see is a continued move this year, my prediction, from software eating the world to a world where we're talking about space eating software. And it's hard tech with brains. That's robots, that's orbital manufacturing, that's system logistics plays. I think all that is based on both infrastructure assets augmented by the advancements we're seeing in AI and data. That's where we're going to see, steel being sexy again. And that's when we're going to see space really thrive in 2026.
I love that, steel being sexy again. Chris, what about you?
On the restrictions on the industry, number one, banging the drum again, it's launch, right? Specifically, if you look at Amazon, right, and their Amazon Leo effort, they're highly dependent upon new heavy lift launch vehicles with a spotty or a very certainly molasses-like ramp up phase here. And that's the industry as a whole is really gasping for more heavy lift capacity. The other thing I would say is the administration, right? I mean, in one sense, a 50% boost to the budget is a great thing to say, but there's also just a lot of uncertainty around policy and policy outcomes. If NASA budgets and NOAA budgets are going up and down, we don't know what Golden Dome spending or architecture is going to look like. And I'll give you one that people aren't paying as much attention to, but the Space Development Agency for 6 years now has been building this proliferated constellation PLEA or their PWSA using this open standard, fixed price, large vendor base of vendors that have come in building these transport and tracking layers. Well, 2025 was the year where this MilNet, which is really a SpaceX Starshield type system, popped up as an alternative to the transport layer to SDA.
That's the communications layer, just for anybody who hasn't been tracking this story.
Yep. So what direction is the government going to go? Are they going to shift the communications layer over to Starlink, or are they going to continue to fund this same communications layer within the PWSA? Things that are going to drive the industry forward this year, the SpaceX IPO, again, I think is probably one of the biggest one. And I think there's also going to be some increased focus on the industry from what will become an interesting developing war, I think, between SpaceX and Amazon, as Amazon ramps up its efforts in broadband, I think we're very likely, 26 pushing into 27, starting to see a price war and, very aggressive tactics by these satellite broadband operators that will impact, not only each other in the broader space ecosystem, but also some of the terrestrial communications providers also.
All right, I'm going to add my little 2 bits in. They might be little, but maybe not. Let me know. But I think the moon is going to get more attention, and that's because of the Artemis 2 mission, NASA's first crewed mission beyond low Earth orbit since 1972. That is actually with crew, is supposed to launch next month. It's going to send 4 astronauts on a flyby and could actually take astronauts further into space than has ever been accomplished before or achieved. So that's a big one. And then also this week, there have been some press releases, and I spoke to some people in positions of decision-making hallways that, they're really looking at how to power things on the lunar surface. So I think there's going to be a bit more focus on, how do we make working on the moon sustainable?
One problem with that, Laura, what are the tariff rates for importing cheese from the moon?
Oh my gosh, Chris.
Oh gosh. That's perfect. Well, with that, guys, thank you so much for coming on the podcast. And we'll see you in about a quarter or so.
Sounds good. Looking forward to it.
Thanks, Laura.
That's it for this week. For your daily dose of award-winning defense coverage, listen to the Defense and Aerospace Report with Vago Muradian. And for the maritime domain, listen to Cavis Ships with Chris Cavis and Chris Cervello. And get your air domain news and analysis from the Air Power Podcast with JJ Gertler and Vago Muradian. I'm Laura Winter. Thank you for listening.